Okay, so welcome everyone to our project webinar this evening. Thank you very much for taking the time to join us once again for this project webinar by West Buildings from Target 5. Delighted Tina and Andy have been able to join us again tonight. Hello guys, how are you?
Good.
Hello.
Right, thank you for joining. Obviously you'll come in just in a few minutes when I get through the prelims. So for those that don't know me, David Johnson, Chief Executive Officer of Leo Crowdfunding. We are a property crowdfunding platform. You can see there that I happen to be an approved person. So if you go on to the FCA, then you'll see me listed there. So we do operate in a regulated environment. And just sort of to highlight that, if you do go on to our platform, you can see there Leo Crowdfunding. You'll see along the bottom, it'll highlight that Leo Crowdfunding is an appointed representative of Sharon Limited, which is authorised and regulated by the Financial Conduct Authority. So just making that really clear at the start, so you understand the environment that we're operating in. We are talking about property investment, and it's important you just understand that caveat. So tonight, I'm delighted again. This is the second webinar we've done on this project. We're very excited by this project. It's an interesting project in terms of the location and the model that we're using. But what I want to do before we kind of hand over to Andy and Tina is just highlight to the attendees some of the key investment opportunities that this particular project offers. I think firstly for me, and I come from sort of 20 years involved in property investment, from buy to let to overseas to marketing UK stock in Asia and bringing Asian money into the UK. And one thing I really like about this particular project is that it's an opportunity to JV with an experienced high yield HMO conversion expert. And that, I think, the track record and the experience that Andy and Tina are able to show, I think this is a very interesting opportunity for that reason. You're dealing with people who know what they're doing and have a track record in what they're doing. It's also a hands-off passive investment. And again, I suppose time is precious these days. A lot of people perhaps have a little bit of capital, but don't really want to start buying their own property and have all the risks that go with that. And indeed, some of the hassles. I'm sure Andy and Tina will agree, there's hassle sometimes in owning property and getting those phone calls in the middle of the night with a leak, something like that required, a plumber emergency, etc. But this offers hands-off passive investment. Basically, Andy and Tina run the project, but you have an opportunity to invest without that hassle. And then thirdly, I think, which is really interesting, is this whole concept of recycling your cash. This idea that when you make your investment, you can potentially get 70% of your investment returned in 12 months, which means you can take that money and go and do something else with it, invest in another project, which is great for diversification, but you're still receiving the benefit of your initial investment. So they're the three things I would highlight just to keep in mind as we go through the presentation tonight. So delighted tonight that Target 5 are able to join us, and rather than me spending too much time talking about them, it's best to let them introduce themselves. So I'll let Tina go first, ladies first, and then Andy, you can take over from there, just a brief background and a bit about yourselves.
Thanks for having us, David, again. I have got approximately 20 plus-ish years in the industry, in the property industry around Sussex, dealing with large PLC developers, buy-to-let investments for first-time investors and everything in between. Working with national PLC developers in big land deals as well as conversion opportunities. I was president of the Brighton Hove Estate Agents Association in 2018 and have been working with Andy officially for a couple of years, but we've been doing business together for probably coming up for 6 or 7 years, I'd imagine. So, yeah.
Brilliant, thank you.
Hi, I'm Andy Babayan. I founded Target 5 eight or so years ago. I've been a landlord for 20 years and ex-army officer, but was developing property and renovating property sort of for my whole military career, then professional career in commercial defence out in the Middle East, and then moved sort of full time when we founded Target 5 8 years or so ago. Since then, as a company, as an organisation, we've done more than 350 projects for ourselves and for other people. And I've got a reasonable portfolio, a lot of experience in this area, high yield, and experience sort of all of the problems that come with that. Seen recession, seen boom and bust, and this for us is sort of a little bit of is a really interesting new project for us. It's a slight diversification from our typical model within Target 5. So really sort of excited to see it through, because it's a new thing for us. It's a new thing for the crowdfunding sort of area, doing something like this.
Yeah, brilliant. Okay, thanks very much. And obviously, you mentioned there ex-military. I think it's maybe worth mentioning it was actually a bomb disposal officer that you were, which means you've got a degree of an attitude towards risk. There probably isn't a more risk-conscious job in the world than being a bomb disposal officer. But I think it's fair to say you do apply some of those skills that you developed and learnt and honed in obviously operational theatres, and you bring that sort of knowledge into your property investment.
Yeah, certainly try to. You know, when we go into to anything, we just sort of, we look really clearly at what it is we're trying to do, and then just look to sort of mitigate any problems, preempt, look at and try to sort of stay ahead of the curve, as you would do in military bomb disposal.
Yeah, brilliant. Okay, Tina, so where exactly is this project?
So West Buildings is the official address. It is in Worthing, which is just west of Brighton. For those that don't know, it's in Sussex, which is our core area that Andy and I have been working in. So really experienced in that area, and right on the south coast, so you can actually see the sea from the window. Not quite a sea view. I'm not sure I could quite stretch to that, but oblique sea views. Yeah. Yeah, so really close to the town centre, as this map shows. That you can see the red pin there, and close to Worthing Pier and the beach, as I say, which is a real core area of interest for us, because the local council are focusing on making it an area of regeneration and sort of breathing new life into the main thoroughfare there with some investment. So yeah, really good area.
Okay.
We know this area really well. So it's and I own a few properties just close by as well. So in terms of figures, I mean, these have been shared, so we'll rattle through. We've got the purchase price, acquisition cost, renovation costs, and all of that. We've sort of gone through everything in terms of surveys. It's all completely costed and ready to go. Expected valuation, and then you got the equity funding's already in place with the senior debt, and then we've got which is sort of and then our preferred exit is to refinance, and we're expecting sort of 550, hopefully slightly more, but that's what we're expecting, and we've got some options there, and we're looking for that's the number that we're looking for, and we're I think we've got the minimum raise of 100. We're about 40% there, and then about 30% of the total at the moment.
Mm-hmm. Okay, so just to highlight a couple of those things. So your total cost in terms of acquisition cost, purchase price, renovation costs, about 407. Expected valuation in 12 months' time after the refurb, 550,000. So even before we talk about anything else of letting the properties out and gross yield, there's round about a projected equity being created just by doing the refurb of about 142,000. Is that right?
Yeah, that's right.
Yeah, which obviously is cool, and it shows a bit of sort of fat in the deal. And then the bank funding
it also helps to completely de-risk the project. So. Yes,
no, very good point. Very good point. The bomb disposal officer talking about de-risking, that's always good. That's always good. So the bank funding then, as you mentioned there, so those who have read the equity offer doc will know it's one of the main banks, one of the big lenders. Just to highlight one thing, just in case there's any sort of confusion on previous webinars, the bank funding is in place for the purchase and refurb. Since the last webinar, Target 5 have made available to us as a platform the full loan agreement. So that has been credit approved. We have visibly looked at that, checked it, and that bank funding of 263,900 is absolutely in place. Since last webinar, T5 have also been able to send the valuation that was done on behalf of the bank, and that has been made available on the site. You can actually go down and download the valuation. So that's some progress that's happened since the previous webinar. So just to confirm that, for the purchase and the refurb, there is definitely a full loan agreement in place for Target 5, which is great. And then the investor funding, 142,538. So that sort of funding, what are you kind of allocating that to? I know it's kind of, you've got bank lending and you've got investor money, but you're allocating that money specifically to an area?
It sort of has worked out that it is going to be used predominantly for the refurb. There are a few other costs, project costs essentially, that will be included in there, but it has all been costed out and that's why the numbers are quite specific.
Yeah, no, very good, very good. And as we stand, as Andy said, we're 9 days to go. We only launched this last week. 19 investors, 42,000 in. I think it's fair to say that of all the projects we've done, we've probably been asked more questions about this one, which shows the level of interest. But because it's a bit unusual in terms of it's if you like, a purchase, a refurb, and then a rental income, I think that's generated more questions. And Tina, I know you've been very active on the forums, answering multiple questions on the forums. So thank you for being so readily accessible. It shows the level of interest there has been in the project.
Yeah, I mean, like with any of these things, when people are asking questions, that excites us. We like to be able to help people understand what we're doing, even if people aren't interested in investing. It's absolutely fine to be answering those questions.
Yeah, good.
Okay. So I was just going to say really quickly on that. I mean, it's just been really, really useful for us because I think we've sort of maybe learned a little bit about how we could some things we could communicate, because it's for us it's really, really clear. We buy, refurbish, we renovate, we refinance properties, and it's just really about,
it's like automatic for us.
Exactly, yeah. Putting that in a way that really the people get. So we really welcome any questions if anything's not clear.
Mm-hmm. Yeah. So just on that, remind everyone you can ask questions tonight. So don't use the chat box. Prefer to use the Q&A box. So you can ask any question you want in the Q&A. There is a section later on, time permitting, where we'll try and get through those questions. And again, we can go back to the forum. Tina will be delighted to know we can go back to the forum tomorrow and put them back up in the forum. But by all means, if you have any questions, feel free to drop it in the Q&A, and we'll try and deal with it when we get to that section later. So this is the actual renovation cost then, 145,000. Again, you provided to us as part of the DD a full breakdown of every single penny. But by way of summary, just run through, Tina, quickly the sort of the main things you're doing.
I mean, this may be Andy's area of expertise a little bit more, but I've been sort of quite heavily involved in looking at the breakdown. And from the very beginning, when we saw this property, we knew what needed to be done on the face of it. But as Andy alluded to earlier, we've had structural investigations done on it. We've literally looked at this and looked at it again and put it through what we call our mincer, and then looked at it again and seen what we come out with. And clearance, as it says there, everything from the floor up, including a light shop fit out, creating new entrances, potentially some new windows, everything, and then door handles and sinks, you know, and everything in between. So it's quite a job, but it will be absolutely gorgeous when it's done. So
what you submitted to Leo was, we ran on to 3 or 4 pages. What Tim put when we got the price from the builder, ran on to about 23 pages. So it goes on to quite a lot of detail on that. So.
Yeah. And this is just the layout then of the building. You've got a ground floor, which obviously is commercial, and then 2 floors where there's a 3-bed and a 2-bed apartment. So this is the layout. Do you want to just sort of briefly explain the concept of the 2 apartments and what you're doing with those, and then what sort of tenant perhaps you're expecting in the ground floor?
Yeah, I mean, the whole concept around design and layout of the end units for us always stems from what feedback we get from our sister business, the lettings business, Sussex Property Partnership, which, for transparency, Andy and I also own, and will be managing the properties moving forward on a full management basis. So we take feedback from what the tenants, we call them residents, are saying about layout. So one of the things we've taken certainly this year is that lots of bathrooms, lots of personal private space because of COVID, etc. People want to be able to have that separation degree. Light and sort of circulation space. In terms of the shop on the ground floor, we're going to probably be, with the declassification of the use classes now, it gives us a lot more flexibility of who we can advertise to get in there. And as I said earlier, there is a lot of regeneration going into the area from the local council. So it could be an architect's office or a surveyor's or an estate agent or a nail bar or a salon or, anything. So there's a real diverse community in the area, thankfully. It's one of the reasons we've chosen it. So
Good. Okay, and then in terms of your design, then I was quite impressed when I saw some of your mood boards. You've obviously spent quite a bit of time thinking about the design and lighting and how this looks. So what's the thought behind so much going on? I'm kind of from a Buiidlings background, and it's kind of like you want to get the cream carpet that's last on the shelf of B&Q, and you want to get the cheapest doors you can get to maximize your yield. You've obviously got a different mentality than I used to have. So what's the thought behind this?
It is that everything's moved on, and I've been a landlord for myself for a long time, and I've gone through Magnolia and and just done the cheapest possible carpet and all that sort of thing, and we used to hygiene board in the bathroom.
Yeah.
And but that's things have moved on, and even though we're looking here, it's a high year building that's got 2 and a 3-bed. It's this sort of, we look at everything sort of from a legislative perspective, sort of HMO type units in terms of fire and making sure that we've got the safest type of place, but then also from a design perspective, really looking for that sort of co-living type experiences. We're looking at young professionals who are going to be renting these properties, and the bar is raised, and we've been locally, we've been some of the people who've been raising the bar, we've been achieving the best rents, the best levels of occupancy, and the best refinance valuations. So and the reason for that is the quality of the product, and that's just really, really nicely designed stuff, as you can see from the sort of the mood boards, and we've shared some pictures of the projects we've done, but also just nice places to live in terms of the design. So practical, just like USB points in terms of the storage, in terms of just the way that it is for people to live. So that means that it's easier to rent stuff for better returns, but most importantly for much for much smaller void periods and reduced maintenance costs as well. So that's critical for us.
Yeah, it's really important for us just to add to that not only does it look good and it's nice for the people to live in, but it has longevity, and that we make sure the products that the project managers and the builders are looking at aren't just shiny and pretty on the surface. They've got to last, because when you do have a HMO type co-living space, there is naturally more people in the spaces, so it has to be durable. So that's quite important for us.
Yeah.
And as Andy says, you know, we are achieving higher than most rents in the area, and that is, you know, proven, achieved figures that we, you know, go through on a sort of bi-weekly basis to make sure that we're not making any sort of false kind of claims, or that we are trying to push the boundaries too far. And yeah, and these figures here sort of reflect that research and that proof that we've got in the area, really.
Yeah, and the fact you've got, you know, other projects in the area, and the track record, you kind of know what the market will take, and also what it demands to get those higher.
Yeah, and also what you can push it to a little bit. You know, that, you know, there's no point in being the person that's following the crowd if we can be the people that are achieving the best rents, but not being, you know, overly silly with that, and managing the risk of that as well. So
we love people that follow the crowd, you know. on my side of the fence, side of the fence, we like following our crowd. Maybe not on your side. I know what you mean. No, that's interesting. So the annual rent then, projected on these when it's refurb, and you know, the mood boards are excellent to give potential investors the opportunity to see the standard of your work and the quality of your work. So you're looking at potentially a 48k annual rent from the commercial unit, the 2-bed flat, the 3-bed, which is obviously broken down into 3 sort of professional individual tenants. That's bringing in an estimated gross yield of 11.7%. We didn't, on the first webinar, maybe spend long enough, you know, discussing that, because really this is the, if you like, the heart of the investment after the equity in the refurb. You know, this is where the money comes from. You're getting a predicted 11.7%, you know, gross yield, and over a, you know, it'll be a 5-year period. But obviously, your experience, you're comfortable. These figures are very achievable, and that's what you're going with.
Yeah, I mean, we spend a lot of time, as I say, doing the research before we even put an offer in on what we think we can achieve, and we tweak that, and we fine tune it, and we keep sort of pushing the boundary and bringing it back and re-looking at it again. And yeah, we feel you know, our research is telling us these are achievable, and that's been, you know, corroborated by local agents as well. So.
Okay, brilliant. Okay, so let's sort of deep dive a little bit into the return. So, I mean, as we mentioned, the gross yield of 11.7%, if like, is a core figure, I think, for investors to have in their head, in terms of the return once the property is let. But in terms of how this has actually been structured, we've structured it slightly different, just to try and get investors to understand the benefit of this idea of recycling cash, this concept of not putting your money in and leaving it until the end of the project, and then looking at an ROI figure. But if you were to get your money back, maybe 70% after the first year, and then your rental income as you go along, therefore, you know, is a different way of just confirming, or should we say, you know, analysing the financials of that. So Andy, we've kind of used this as an example. If someone was to invest £100, which is a share, we've used this example that they put the £100 in year 1. When the refurb's complete, the plan is that the property will be refinanced with whoever's best at the time to suit the project, and that the intention is to release £72.71 of the £100 back to the investor. Is that correct?
Yeah, exactly. So as you say, the challenge here was to try and communicate something that really reflected the nature of, you know, what we're doing, which is, you know, buying something, recycling or refinancing out, you know, the vast majority of the money, and then keeping an ongoing return there that makes the whole thing interesting, which is what we, you know, what we're offering here. So they obviously do the refurb and then refinance out, and those figures were based upon the our refinance valuation. Now we've got it, you know, that's showing at the end of year 1. We hope to refinance before then. You know, we could be doing it, you know, sort of as early as month 5 or month 6. But we've shown it for ease at year 1. We like to sort of be quite conservative, so that money could come out earlier. And obviously, and rent would then obviously potentially start sooner as well, which would, you know, sort of improve figures. But broadly speaking, money comes back out, sort of 70, just over 70% or thereabouts comes back out. And then of the money left in, there's then a return that comes out over the next 5 years. And then finally, there's the final rent payment or dividend payment, if you like. And then when we either refinance or sell the property at the end of year 6, then there's sort of a final payment, which is the remainder of any invested funds, then plus a further share of any equity uplift, which we've, so the capital growth sort of base marked against the valuation at the end of the project. And that's, we've put that in as what we consider to be quite conservative 10% over 6 years. You know, it could easily be more. It could also be less. But you know, that's how we've calculated it. Money out after within a year, and then income going forward with then an extra payment at the end.
Yeah. Okay. No, very good. That's well explained. So I like to sometimes sort of summarize this type of thing. So an investor of mine coming in, they put £100 on the table. That allows you to purchase the property, refurb the property, and then there's an equity created. In this case, about 142,000 equity created in the deal. So now the investor is a shareholder of an SPV that has a property that has tangible equity in the property, which is a nice place to start. At the end of year 1, they potentially get around about 70% of their investment back into their pocket, which means they can go and invest somewhere else. You know, invest in a different property, great for diversification. There's not many investment models and opportunities that actually give the investors that opportunity to actually recycle their cash and profit share of the rent, and then still have the ability to share in any capital growth at the end. So, you know, fascinating model. I think it makes a lot of sense for investors who want an income type product. You know, but who also don't want to have their money tied up in its entirety, you know, for many years. So I think a really interesting model you've designed there. So there's this term used here, MIRR, 13.44%, you know, per annum. That's like a calculation that's done where you're getting money back and reinvesting that money, and if you like, putting that into the calculation over 5 years. So this is where you arrive at what is known very much as the best way of calculating a many-year investment where you're getting some back. So for those that want to know that, if you read the offer document, it goes into more detail on that, and you'll be able to look at that in your own leisure. So always like to highlight through the presentation, this is an equity investment in a project. Capital is at risk, returns are not guaranteed, and that people should read the full documents and the full risk warning before deciding to invest. So by way of the offer document, I want to point people to the platform where they can actually register. And once they're registered, they then can download what is a very comprehensive and professional offer document that you guys have produced. So it'll run through a lot more information than we can do tonight. You can meet the team, all the different members of the wider team, and look at the lending terms. So there's a number of annexes there which go into detail on the project. Then there, as I mentioned, there's been updates since the last webinar. So the full valuation has been received. It was done for the lender. That's on the platform. It can be viewed. And then the full loan agreement is now in place. And if any investor particularly wants to see that, it's not something that we're going to make public for obvious reasons. It's commercially sensitive. But if an investor particularly wants to see that, then they can contact us, and we'll see if we can facilitate that. But we have viewed it within Leo crowdfunding and verified that it is what it says it is. So leave it open now. If anyone wants to ask any questions, they can jump on the Q&A. We have another sort of 5 to 7 minutes after this to wrap up. So there doesn't seem to be too many questions so far, which means you guys have done a fantastic job in explaining everything, and you've managed to head off the questions. So we'll give it a second And then what we'll do is I'll run through the next bit, and then we can take any other Q&A at the very end if anything else pops in. So this next bit's more sort of for me to do, and I say then we'll round back with and finish off with Andy and Tina. So just to highlight sort of again, we as Leo Crowdfunding is an appointed representative sharing, authorised, regulated by the FCA. This investment that you're seeing tonight is not open to the general public to invest in. You have to be registered on a crowdfunding platform, and there's a what's called a registration process before you can become investor ready. And so let me run through that very quickly so people understand what that process is, and if you do decide to invest, then how you actually do that. So if someone was to just log on to our homepage and click on the West Buildings project, they'll see this register to invest or log in to invest. So at this point, you can read a little bit of information, but you can't access the documents. So you actually have to register. And that process is leaving some very basic information, and then you'll have a confirmation email. Once you confirm that, then you'll be able to see your account at the top right-hand side of the screen. And when you click on that and drop down, you'll see portfolio, profile, messages, etc. And this is how you then go further to complete your actual registration. So 3 parts to this: some KYC, have to upload some ID. They may ask you for some anti-money laundering docs, just a proof of address. You then have to go through an investor readiness test, and this is where you answer some multiple choice questions about investment, about risk, about what it means to invest in property. So you have to be able to satisfy the platform that you understand the nature of this type of investing. And then you also designate if you're a retail or a restricted investor, a sophisticated investor, or a high net worth investor. And each of those are a different designation and are relevant to the platform going forward. So you can designate which one of those is relevant to you. Once you've then actually registered, you can see now you can download the documents. They will appear on the page for you, and you can download the full offer document, the target 5 selection criteria. The valuation is now there as well, and you can see the information that's actually relevant to the raise, which is really good. And then if you decide to invest, once you've clicked on, sorry, go back to there. So up here, you'll have the option to invest. And then from there, you simply input the amount of £sterling you wish to invest, and it will tell you how many shares that you're buying with that amount. So that's very straightforward. You confirm the amount, continue the payment, and then you have 2 choices of payment. You can either move funds directly onto your e-wallet on the platform, and then from there it'll be moved into the project e-wallet, awaiting final drawdown, or you can pay by bank transfer. If you select that option, you get a unique reference number, and you can then transfer the funds direct to the project e-wallet. Now, at this stage, let me emphasize, the investment doesn't actually go to target 5 until such times as the minimum raise has been reached and the final shareholder agreement has been accepted. So funds will be in a holding wallet, but that doesn't mean that you've committed entirely at that point. You have a 14-day cooling off period from when the raise closes, and then you must accept the shareholder agreement. Now, I know you guys have been working hard, and your shareholder agreement is effectively ready for the shareholders to review, which is really good. So that should save time, so that will be available soon on the platform as well. So investors have the opportunity to review the share agreement. Sometimes there's some points that the shareholders or potential shareholders make that the fundraiser might decide, you know what, I'll maybe clarify that, or I'll change that point. So there is a little bit of opportunity for would-be investors to review the shareholder agreement. And then when it's the final version, then it's really up to the investors to decide if they want to invest or not. It isn't possible to have an elongated process where everyone wants to have a minor tweak to a 30 or 40 page document. So at some point, the fundraisers decide this is what we're going with. Investors are asked if they want to confirm to accept it or not. If they choose not to, that's absolutely fine. And if they choose to, then that is the confirmation they want to progress with the investment. So in terms of platform due diligence, I think this is an important point. So as a platform, we are not endorsing this as a good investment in that sense. We are not financial advisors. We don't advise on what people should do with their funds. What we're confirming is that we have carried out a level of due diligence on the project. So we have carried out some due diligence on Andy and Tina. They've provided KYC, AML documentation. We've looked at their CVs. We've looked at their track record. We've also verified the financials that they've presented in this project in terms of making sure the figures add up and that the formulas all work. Avina is our investment analyst in the company. So she's had many hours with her calculator and her formula on Excel, working all out the different percentages. So again, we verify that the figures make sense. And then we've also verified that the SPV is registered. We've looked at the shareholding of that. So we carry out DD on the project in that sense. I hope that's clear in terms of the DD that we do. But we're not saying that this is a fantastic investment. Everyone should rush in and put in their life savings. We're not saying that, of course. So I want to make that very, very clear. And just to wrap up then, before we go back to Andy and Tina, again, I said at the start, the three things I think really caught my attention with this, and one of the reasons I like this particular project, a chance to JV with very experienced, high-yield HMO conversion experts. And hopefully tonight, as Andy and Tina have talked again, made themselves available to go through, you get a sense that they know what they're doing. They've done this before, hundreds of times, and this is really just another day in the office for them. It just so happens on this occasion they're using a crowdfunding platform to access some new investors. I should also point out, Andy and Tina, this project's going ahead anyway. It's not that you have to have the money from the crowd. You obviously were doing this project anyway, but this is part of just a diversification of your strategy to perhaps reach out to some new investors.
Yeah, no, 100%. I mean, obviously, we've exchanged on the project, and obviously, we wouldn't do that if we didn't have the money available. But yeah, no, we're really excited about the idea of sort of doing this and doing things in a slightly different way, working with a different group of people, and and taking them through us, through what for us is actually relatively routine project, but and use it as a proving ground to then do this again with other exciting projects as well. So yeah, no, 100%. This is happening regardless.
Yeah, brilliant. Okay. Secondly, it's a hands-off passive investment, which is what I think a lot of people, particularly because of COVID, are very nervous about starting to buy their own property and not able to travel to see it. So I think property crowdfunding and a project like this gives investors the opportunity to have a hands-off investment and let the experts who know what they're doing get on with doing it and at least receive a benefit, which I think is really cool. And then this whole concept of recycling your cash. I keep coming back to it, but for me, this is what really caught my attention about this project. Having been involved in buying and selling, over 100 buy-to-let properties in my time, this whole concept of being able to invest in a buy-to-let HMO type high-yielding property, but actually receive 70% of the investment back within 12 months to then go and do something else with it. I just thought was a really, really interesting concept of recycling cash. And I think while this is quite a relatively new concept, guys, as we've discussed, we're testing this with the market to an extent. But I think as people begin to understand this, I think we're confident this is going to be something that investors are going to like going forward.
Yeah, and when we deliver on it, we sort of fully anticipate, and we hope we're going to sort of be really going to prioritise our investors. We're certainly going to prioritise our investors' returns and getting the money back out to them to make sure that they're really satisfied. But also, we're going to try and focus on beating the figures that we put on the document.
Yeah. Right. Okay. So the last slide, and I'll let both of you have one sentence each to finish. So just really summarising. So where we are at the minute is 42,000 already in, 19 different investors. And from tonight, I know a number of investors that we've been speaking to wanted to come on tonight just as a final confirmation and just sort of hear the information again and hear the updates. So the minimum raise is 100,000. So we're literally 50% there for that. Still 9 days to go. So that's the timeline. In terms of, it is a 6-year project in the sense of that's the length of time the project is going to run. But you have this concept, of course, of 70% of your funds back in year one. This 13.44%, again, we've explained the concept of that. But I think the real key figure to have in your mind as an investor is the gross yield of 11.7%. So that really is the, if you like, the driver of the rental income over the 5-year period after the refurb. And really that's the key figure. So that's the gross yield that is being predicted. The minimum investment into this project is £100. That gets you a share. And people can invest a small amount if they wish, either to test this project, test the platform, just get an inside view on how this project sort of pans out. I know I've got some real interesting ideas on our monthly updates and maybe running some webinars. Some maybe having Tina and Andy on site, maybe a wee hard hat on, whatever, doing your refurb and stuff. So we tend to make this interactive, guys. I know you're both up for kind of keeping investors informed and almost making this like a monthly check-in with you on the project and how it's progressing.
Yeah, go on.
Yeah. I mean, I'm pretty sure that nobody needs to see either of us in a hard hat, but we've definitely got people we can show you in a hard hat. Just from my perspective, just to say on this here, this is what we do day in, day out, and it's sort of, as Andy said earlier on in the call, it's easy for us to go, oh, this is what we do, you know, this is how the model works, but this is tried and tested way of doing this, and we are super conservative with our numbers. We are, you know, we look at them, we re-look at them, and we do that frequently throughout the project to make sure that we're on target for everything. And we try, as Andy says, where possible, to beat any numbers that we've sort of set out to achieve at the beginning of any project. And you know, as Andy says, we'll be doing this regardless, but we really believe in the project and the numbers. So it works for us, and yeah, hopefully people will come along for the ride, really.
Yeah, that's it. I think for us it gives an opportunity to do something. Just, you know, we're always interested in trying something that's slightly different, and I think it should be quite fun. It'd be quite fun to sort of share in this, you know, and sort of take it through, give an opportunity for people to meet the team as you go through, and get a real understanding for how we work. You know, we so far we've sort of dealt with we got a sort of very, you know, sort of core group of relatively wealthy clients that we've worked with, and you know, we're looking to sort of to do something in a different way, and we're excited about the way this is going to work.
Okay, guys. Well, thank you very much for your time. And again, I'll point people, if you have questions, get onto the forums tonight or tomorrow morning. I know Tina will check them in the morning, and if there's any questions we can answer, we'll do our best to answer them there and get you the information. There are my details and support details on the screen, which if you want to reach out to me directly or you have a question for support, then you can snap that screen now and be able to contact us. So again, for those who are interested in investing, make sure you're investor ready, go through that process. We've had people in the past who literally have started the registration process, completed it and invested in less than 10 minutes. In some cases, even as webinars have been going on. So it's not a complicated process, but you do need to sit down and focus on it and get it done. So listen, thanks everyone for joining, and I hope you've enjoyed the information, hope you've enjoyed hearing directly from Andy and Tina. Thank them for taking the time to once again be here tonight and give up some of their evening to share it with Leo Crowdfunding. And we look forward to making this project a success in the last 9 days. All the best, guys. All right. Talk to you all soon.
Cheers. Thank you.
Yeah,
bye.